Will I pay more on my home loan if I go through a mortgage broker?
I need answers.
Well, good question you raise, and today we're going to go through all the things you need to know about using a mortgage broker. Let's dive right in. So before we get started today, I might quickly explain how a mortgage broker operates. Effectively, there's no cost for the service. Generally, they've got access to a large number of lenders and they'll look to find you the solution that works for you. But are they going to cost you more in the long run with getting your home loan?
What did it cost?
The short answer is no, you're not going to pay any extra to get a loan through a mortgage broker. They do get paid commissions by the bank on success of looking after you. However, the banks view this as a way of outsourcing a lot of their work, because the traditional method of getting a loan is they set up a branch, they have inherent overheads with leases and costs and staffing the branch, and then they pay a lender commissions and bonuses and stuff like that associated with going direct. So when they use a broker, they're effectively outsourcing it, so the banks see it as a way of reducing costs and leveraging a network out there to increase their volumes. The second reason is prior to mortgage brokers entering into the mortgage market was dominated by the big banks. Effectively, there wasn't much competition, so the brokers brought competition and it showed smaller lenders and bigger lenders and how they compared against each other, and effectively brought that competition to reduce rates. What this meant was the bank's net margin, so their profit per loan, went from net 4% right down to 1% as a result of mortgage brokers. And as a result, it's no surprises that consumers are using mortgage brokers more than ever. More than 60% of loans are originated through mortgage brokers, and consumers love the ability to have that choice. So the third reason is that mortgage brokers have a large range of lenders that they have access to. So instead of going to your bank where you get declined because you're in a short-term employment position or you don't have enough deposit, the mortgage broker will look at your situation and find the lender that's going to suit your circumstances, meaning that you're not necessarily going to go from bank to bank and get declined and not have the success that you're after. So obviously rate is very important, as well as that is getting your loan approved, in which they'll help you ensure success. So for example, we had a customer come to us recently. For all intensive purposes, we'll call him Max. Max had recently become a permanent resident in Australia and had only been in Australia for a short period of time, 1 year to be precise. In that time, he'd been promoted in his role and was on a short-term contract. Now, the problem with the short-term contract was it was only for 12 months and he'd been 2 months in the role. He went to his bank direct, in which they actually said they weren't able to assist. When we looked at it, we were able to come up with some options and solutions that suited him, and he was able to get the loan, so he's absolutely wrapped. So that's a live example of how a mortgage broker can help you, particularly in a scenario where you might think, yes, I've got a full-time job in a contracted position for 12 months. What problems might I have?
Do we have a problem? Huh?
So to wrap it up, going through a mortgage broker won't cost you any more. If anything, they'll be able to tell you what the bank down the road is going to offer you and where the best option is. They'll also look to find you the lender that's going to meet your circumstances the best. So that's it for today, guys. If you liked today's video, please like and subscribe. As always, thanks for watching. And if you have any questions, hit us up at huntergalloway.com.au.